Looks like you're ready. Okay. Let me refresh. This should do it. Aha. Looks
You'll
like
be
you're
the
ready.
same link.
Okay. Ladies and gentlemen, everyone who has been in our chat, I love the energy and the anticipation. And I have to say to Annie's community, it is absolutely awesome to see how active you all are. The passion is vibrant. Just want to shout out everyone in the chat because this is really cool to see. Apologies for being a few minutes late here. Annie and I were just working on a few video aspects to make this live stream perfect. And we are thrilled to have Annie on this show. She is a partner of OKX. She is a trader herself. She's got a super cool brand for TradeTravelChill that we are going to dive into. And I want to make sure that everyone knows that in this show, we are doing things a little differently. Historically, on the TradingView show, we have dove into global equity markets and big macro conversations. Annie is bringing something different today. We are going into crypto markets, we're going into trading strategies, and we're also going to talk trading philosophy because she's got quite the story to tell about sort of the company she's building and also some of the things she's working on with OKX. So with that being said, let me introduce Annie, let her give us some background into who she is and what she's bringing to the show. And as you stick around, we're just going to go deeper and deeper. So Annie, take it away for a second and let everyone know about your brand, TradeTravelChill, and what you're going to be talking about on today's show.
Sure thing. Thank you, Steph, for having me. I'm excited to be on your channel. This is round 2, but I am going to be talking to you guys about cryptocurrency, which I'm really excited to talk about. It is a very different market, but because it trades 24/7, but I apply a lot of Forex trading principles to my trading strategies for cryptocurrency. So the crossover becomes really, really good. And what I'm going to be taking you through today is where we are in the macro cycle, because we're at the phase. We've just had the Bitcoin halving less than 2 weeks ago, I think it was. And this is the phase where, it kind of leads into the up only phase of the cycle. However, there is something that happens prior to that, which is essentially altcoins tend to bleed out a lot. And it is like the final kind of panic phase. So there are a lot of people who have been building portfolios in altcoins for a long time and are in a little bit of panic right now. So I'm hoping to show you, basically to calm that by showing you where we are in the cycle, and then just a little bit about my day trading strategy and how I turn that into long-term investing.
Excellent. And the first thing I want to dive into before we get to the charts, before we get to the educational component, is I do want to talk about what you bring to the markets in terms of this new generation of traders, whereby, say, 10 or 20 years ago, right, you could really only trade on a desktop, or you had to be maybe in certain regions of the world to access markets. Today, that's changed drastically because essentially you can trade almost any market from anywhere with an internet connection. And I'd love to hear what your thoughts are in this new era and sort of how you are approaching markets, because trading and traveling takes a lot of skill in terms of time management, maybe not getting overburdened with notifications, trying to stay fresh, enjoy your surroundings. Tell us about that so that all the traders watching can implement that maybe into their process as well.
Yeah, look, I mean, with tools like TradingView and platforms like OKX, it really is very easy to be able to place trades on the go and manage them on the go. And, I personally don't use my phone too much to place my trades because I feel like I need a little bit more of a screen. But for managing them and for taking profit, it's very easy. So it means I'm not stuck at home in front of a computer, and I can be wherever. And if an alert goes off that tells me it's time to take profit, I can just execute that within a few seconds via the phone app. So it's amazing. Using the online things on a desktop or a laptop means no matter where I am, I can trade if I want to trade. I can protect my trades if say I'm going to be flying for a few hours, and I don't want my trades to turn around while I'm in the air and I land stopped out in a loss. I can protect my trades before I take off, but it also allows me to do community updates. And, no matter where I am in the world, I'm always able to keep my community updated with what I think is going on in the market.
I can just speaking about your community. Like I said, the chat's active. Over 200 people are watching right now. We've already had close to 500 come in and out. So you've got quite the community. And how about your
Yeah, they're
concept of alerts? Tell us about how you use that.
That's a really good question, because it was one of the fundamental things that led to me ending up becoming a profitable trader. It was one of the things along my journey. I think it was probably one of the best things that I did for myself, and I highly recommend it. And that is, when you place a trade, set your alert for your stop loss and set your alert for your initial take profit, and then close the computer and walk away. Because those candles, in the meantime, after you have entered a trade, that is when the anxiety is at the highest peak. That is when you are telling yourself stories that, oh, maybe I got it wrong. Maybe, oh, it's gone a little bit red, I'm going to lose money. Or, all the stories happen in those first few candles. So if you've entered a trade, providing it has met all of your entry requirements, you should have confidence in that trade, and the outcome should be irrelevant to you. If you're practicing good risk management, you know that you can't win every trade. That's why we have to have good risk management. So, that's how I manage my trade, is I set an alert on my stop loss. It means that if the price hits my stop loss and I'm out at a loss, I don't have to rush back to the computer. The trade's done. Okay, I'm just going to leave it for the night and reset. I have a 2 losing trade rule. So if I lose 2 trades in a row, I can't trade for 24 hours. So, if that alert happens twice in a row, I'm out for 24 hours anyway. So I can go do other things with my life. But if the take profit one hits, then no matter where I am, I can manage that trade. I can, have a look at the price and see, is it still running? Do I want to trail my stop loss? Or do I want to exit completely? I can make those decisions. So, I highly recommend replace watching candles with alerts and go live your life.
I love that. And that is actually a consistent theme that I hear oftentimes among new traders. And so if you're a new trader watching this show, I recommend you just note down the time where Annie just explained these concepts. You can go back and rewatch this, because I've sort of learned at times that if you're sort of staring at the trade, for longer than 30 minutes, an hour, maybe something isn't going right because you haven't really set up your take profit, your stop loss. You don't feel confident enough to just sort of close your app or close your desktop app, walk away for a bit. So I always love hearing that advice. And one thing you and I spoke about before this show went live as well was weekend trading. So in crypto markets, it's fascinating because it could be Saturday, it's Sunday, you have the day off, but they're still moving 24/7. Maybe talk to the users about how you manage that sort of pressure to always trade on weekends, sort of staying mentally fresh as well.
Yeah, so we trade a method that is based off market maker trading, which is essentially the big money and how the big money move the markets, and we are trying to anticipate what they're doing, which, in traditional markets, we know the times that the markets are open, but in cryptocurrencies, open 24/7. But the same institutional traders are the ones that move the market in cryptocurrency. It's no different. It's still the same financial players. So the rules for them apply, and they're trading CMEs, and CMEs do close for the weekend. So this is why we get a gap when you have a look at CME charts, because price might move on a weekend for the rest of us, but it doesn't for them. And that means that generally, when they're not on duty, let's say, the volume is going to be a lot lower. So the problem we have with cryptocurrency is, because it is 24/7, you can fall into that trap of spending hours and hours and hours a day on the charts and never stepping away from it. And on weekends, when the volume drops so much, the chances of your trade hitting your take profit is very, very minimal. So therefore, instead of sitting in a trade for 2 days because there's no volume to back your move, you should use that time, or I personally choose to use that time, for rest and recovery, and to just give my brain a break from looking at charts all the time. Because whilst you think that time on the charts is what's going to make you better, it can also really cloud your judgment if you're just constantly looking at the same thing all the time. So, there will be weekends where the market moves if you follow the way that I do it and you decide to have weekends off, there will be weekends that the market moves, and you have to accept that. I always say to myself, well, did I have a good weekend? And if the answer is yes, then it was worth missing a trade that may have moved on the weekend, because 90% of the time it won't. So, am I going to be bored for 90% of my weekends just to maybe one weekend catch that really good trade? It's not worth it when I can do that during the week following where I know the volume is.
That is such an interesting way to think about trading on the weekends. I haven't considered that yet. Where if you consider your sort of trade-off of how much you're enjoying your weekend versus even if you had a great trade, right? How much is that worth to you to have a great weekend,
Exactly.
be mentally fresh versus a good
Exactly.
trade? That's super interesting.
Yeah.
I've not considered that calculation yet. Definitely want to sit down and think about that on my own to see where's that trade-off for me? I'm sure everyone has a different trade-off. How about the concept of your trading strategy? Now, I see you have this chart open. We've got BTC, Tether on OKX daily chart. You've got some educational concepts up here. Is this a good time for you to walk through some of this?
Yeah. Well, this will tie into the weekend thing. And what I'm showing you here on the screen is essentially the method that we trade. And this is a typical pattern that will play over about a week or so. And we generally see the same thing week to week. There are certain things that can affect this, but it's a pretty basic model with many, many complications between each thing that make up the model in whole. And the way that we have found that the market makers work is that, the weekend, we start with the weekends, we call it the weekend trap, because as I just explained to you, that's when the volume is very, very low. And the only people committing to trades on a weekend are retail traders. So what tends to happen as the market is starting to open, which is 5 p.m. Sunday, New York time, as we get closer to that market open, that is when, the market makers come on board and they're basically sizing up what retail traders have done over the weekend. What positions have they taken, longs or shorts? Where is their most likely liquidation level going to be, their stop losses, things like that. And they issue a false move. And the false move is designed to stop out a lot of those traders on one side of the trade, but on the other side is to trap them into a trade in the wrong direction. And market makers need to trap you because they can build their contracts that way. If there's no trade on the other side, they can't build their contracts. Just the same way, if we were to put in a buy order and nobody was selling at the same price, our buy order wouldn't get filled. It's the same. There's always someone on the opposite side of your trade, and that person usually is a market maker. So they issue this false move, and then that false move leads into usually a 3-day or 3-level trend, and everything tends to happen in levels of 3. So you'll see a formation that basically sets the trend. We call this a W formation. And once you have that, we will go into 3 levels of rise. Now, this can happen the other way as well. So we can start the week with something like this, which is an M formation. And that would mean we're going to drop at the start of the week for 3 levels. So we need to learn to understand how to read the false move, because the false move will tell us which way the 3-day or 3-level trend is going to happen. And in between those levels, you can have a retracement where price pulls back, or you can have just consolidation. And that is essentially the market makers building their contracts again before they make the next big move. Following that, we usually have something that is called a midweek reversal. And in cryptocurrency, that tends to happen on Thursdays. It's usually lined up with a news event. So you do have to track what news is happening each week. And based on the news, you can pretty much pinpoint, when you would expect a midweek reversal to happen. In Forex, it tends to happen on Wednesday because, they obviously are just Monday to Friday. And then once you have that midweek reversal, we go into a 3-level drop, and that drop takes us into the Friday. And Friday UK session is when we essentially are set into the trap for the weekend. So the weekend trap is really when you open a trade around the weekend, but it never hits your stop loss and it never hits your take profit. So you are essentially just range bound, stuck in a trade that you're not going to get out of because it hasn't been invalidated and it hasn't hit your take profit, but you've made that commitment. And as long as you've made that commitment to the market maker can use you all the way back here to use you for liquidity for them to build their own positions. So that's the general weekly model that we trade. It sounds scary because it sounds like, why would I even try if their goal is always to stop me out? But that's not how you should view it. You should view it as, if I can understand, I can learn to read what the big money is doing, the money that actually moves the market, then I can profit from that. And that's what we essentially try to do here. And finally, this model will end up feeding up in time frames. So we start this, we usually can identify this on a 15-minute time frame. Once you've had your rises and your drops and things like that, you switch up to a higher time frame to see if it's now going to play out there. The same model plays out on every time frame, and the higher it feeds up, the more that trend turns into a macro trend. So that's essentially what we're always looking for. We're looking to trade, short time frames, but we're trying to trade with the macro trend.
Fascinating. And I have to say, the weekend trap is not a concept that I've heard yet, but I love thinking about the weekend trap now because it does sound like an area, especially going back to what you were saying about the institutional money not being as active on the weekend, and even the gaps on some of those futures charts. That really had my mind turning. I have not considered that yet, and what that sort of discrepancy might mean, or maybe what type of traps it might create. And one other thing you said too that I think is great is you were saying that someone's always on the other side of your trade. I find that to be such a great reminder to new traders, right? People forget that just because you can press buy or sell doesn't mean it's just going to go in your direction. Yeah. There's someone who's thinking the opposite of you, right? So if they're thinking the opposite, like what do you not know that they know? So I love that comment that you made. And how about in terms of the charts that you've prepared for us with this type of strategy in mind? Is there anything that you've been watching? I know that you had the Bitcoin chart open before, and I'm wondering if you want to go through that, or is there any other educational comments you want to make sure that you get out there before we move on?
Yeah, no, let's talk about Bitcoin because we really are in a pretty important period of time with Bitcoin. And actually, in relation to this, let me show you how this is currently playing out on the daily time frame because it's going to help to understand, where we are in the cycle. And so this looks very, very complicated. Just stay with me because I will explain it all. But this is essentially this exact model right here playing out on the daily time frame. So when I said to you that the levels feed up in timeframes, if we can identify 3 levels on a daily time frame, that would equal 1 level on a weekly time frame. So now that you have that in mind, if I was to zoom in on this area, you can see here, this is a daily time frame chart that I'm showing you. There was the W formation. When I go back to this is the W formation, right? So you can now see it clearly with the price action. And this is our rise 1 through here. Back to the model, rise 1 through here. Then we had our retracement, rise 2 and rise 3. And again, back here, rise 2 and rise 3. So you can see how it all matches up. And that means that these 3 levels equal only level 1 on the weekly time frame. Now, when we're starting to create a macro trend, you will find that the drops in price, so in opposition to your macro trend. So this was obviously the very, very start of what is now the bull market that we all now know is the bull market. But in this beginning here, the pullbacks, so your drops here, will not be as dramatic as your rises here. And this is why you're going to make more money when you're short-term trading. You're going to make more money if you trade with the macro trend as opposed to trying to trade all the longs and all the shorts. So when we then have a look at what happens this here would, on a lower time frame, it would equal the 3-level drop. Now, it doesn't show on the daily because it was creating the macro trend. But if you were to drop down to a 4-hour, a 1-hour, a 15-minute, you would see your 3 drops through this period of time right here. That just proves that that is where the bull market is starting. So once we have that pullback, we see another new W formation that created the next level rises, and we're now up to level 2 on the weekly time frame. Then again, we have our pullback, which would only have been counted on smaller time frames, and then we go into our level 3. So that would mean then, if we were to look at this whole thing, that would mean our weekly level 1, weekly level 2, and weekly level 3 is completed, which means if you go here, that means we're here, which would ordinarily be scary because that would mean we should be coming down. But you have to layer that with the macro cycle and where Bitcoin is in its entire 4-year cycle. And when we do that, that brings us to this chart here, which shows, now this is the 2020 halving, and all of the halvings you will find are basically the same as this. So I've just picked one as an example so that we don't have to go through all of them. But essentially, around the time of the halving, we go into a halving accumulation period. And that can last, 80 to, say, 130 days. It just depends on which cycle you're counting. But essentially, it's a wide range accumulation period. And I've counted until the retest. So the accumulation will break out and come back for a retest. The reason I count that is because that's when a trend is proven, right, after a retest. So this is the period of time that we're in. And this is very, very important for altcoins, which I want to talk about as well. But not just yet. This is very important because this is the period of time where, again, any time we are in accumulation, the market maker is building their positions. The longer they hold an accumulation, the more positions they're building. So if you were to look at this and see, okay, 127 days that we held in this accumulation before the breakout and retest, then you zoom out on it and you see what happened from there, this epic bull market. Well, now it makes sense why we had to hold sideways for 130 days to accumulate, because how on earth else are they going to manage getting through such a big move like that? So a lot of the times when you're learning to trade traditional technical analysis, most people hate consolidation because it's boring. They're like, oh, price is just going sideways and just waiting for it to break out. I love consolidation because I know what the market maker is doing. And if the market maker is building their positions, I'm building my positions, like I'm concentrating more than ever when we're in an accumulation period, because the second we break out of that, my job is done. And all I have to do up here is take profit. And that is easy. So accumulation is amazing. Change your mindset about accumulation. But the point of this right here is to show that this whole range that we're in on Bitcoin right now on this chart here, which I'll explain the red in a second, but this is the accumulation. We had our halving here on the 19th of April, and we went into the accumulation a little bit prior to it. So we still got, at least 100, well, I shouldn't say at least, because it really can break out any time. But the moral of the story is yesterday we broke below our accumulation support, and that was a little bit scary for people. For me, this is the best. I'm very excited for this. I've been talking about this range on my channel for a while, and I had been saying before we broke down yesterday, I'd been saying that this is the accumulation range, in my opinion, of this halving, and it should last 2-3 months-ish. And I believed that the top of the range was in. So at around about 73,000, I believe that the top of the range was in. The reason for that is I don't see the market maker testing moves to the upside. So the test happens in the wicks. Wicks tell you a massive, massive story, but that is probably for another day. Because there's no wicks, it led me to believe that the top of this range is probably in until we're ready to break out. The bottom of the range was not, because when I zoom in on this area, you can see here's a wick here, there are wicks here, and eventually, because of these wicks, the wicks tell me that the market maker is testing that level. Okay, they're trapping when we have wicks. So eventually we're testing, and we did break down. So for me, this is a perfect example of what could potentially be the 3-level drop, which again, just coming back to this, the 3-level drop that doesn't actually lead to a big drop in price, but because the drops are about the volume, they're not about the price increasing or decreasing. So, and the volume comes from, you probably noticed that my candles are all many different colors.
Oh,
The
yes.
different
We
colors.
should talk about that. Absolutely.
Yeah, this is a trading view in, like, this particular indicator is our, like, we customized it and put it onto TradingView, but you can get something similar if you want to trade like this. You just go to indicators and type in PVSRA, and it will be, it will be this one here. PVSRA volume will do a similar thing to what my candles are doing, but we want to know that because the colored candles show us how much volume is in the move. Why do we care about volume? Because these are measuring a volume increase. I won't go into too much detail about it, but the amount of volume increase that it's measuring leads us to assume that it's the market maker, because the volume is so large that retail can't come in one candle and do that. So this is how, when I said to you, we're trying to anticipate what the market maker is doing, this is one of the ways that we anticipate that is through the colors of the candle and the volume that they bring in. So this here would be counted as that level 1 drop, and see how it's not a big move. It's not necessarily a decrease in price. It's just a increase in volume in a certain direction. So this is level 1. We have our retracement, and this is level 2. We are waiting for a potential level 3. And we don't always get it, but this is what we're kind of hoping for right now. So for me personally, for Bitcoin, I am actually hoping that it does come down a little bit more. Now it might push up. It might push up to test the 50 EMA on the daily time frame, around $64,000, and then it may give us that third push to the downside, as long as it holds this yellow EMA, which is the 200 EMA. Again, I've highlighted this area as an area of interest because you can see these are high volume candles, and high volume candles usually get returned to when they move fast like this. So this is essentially over time, and it might be over this whole period of accumulation that we're waiting for. So, it could be any time up till maybe the end of June. Is kind of, the deadline. I've told the market maker he can't do any longer than that because I'll get bored. But I'm essentially waiting for that to see if we do get one more, a little bit of a retracement, one more move down. As long as we hold around this area of interest, I would anticipate at this point in time that would set the accumulation range bottom. And once that's done, that's it. That's where we build our positions for the cycle. And we're essentially just waiting for that to happen. And then, like I said to you, that you then become this person here who doesn't have to worry about anything, is just selling on the way out.
So there's so much there to unpack and dive into. And there's actually two things. There's two things I'd love to get into, which is consolidations, and also getting to sort of, bring this back to that OKX connection that you were telling me about before our show. And the first thing I want to say about consolidations that I love that you said was they're boring, right? You're going sideways. Mm-hmm. They kind of breed uncertainty. Am I in the right move? It's not really going the direction I wanted. But with this chart, which I really liked about it being an accumulation phase, if you have the patience and you think you can play that consolidation right, it really just shows that buyers were taking control over those 127 days. So maybe a little more, I'd love to hear more about the current consolidation, because I noticed on the chart you had, I think, about 120 days once again. And so that's really interesting to see that you're using that historical data to get ready for what could be next. And is that what we're looking at here? It's another halving event. It's another 120 plus days. You've got that area of interest marked out. That's sort of, so now you're just waiting patiently, right? Is that sort of the way for us to think about that?
Yeah, absolutely. We're just waiting patiently to see, like I said, I feel at this point in time that the range high is in, but I'm waiting for them to set the range low. And, I'll know that when they start to wick into the lows. Like I said, the wicks tell the story. So when they start to wick into the lows, but they don't return to that area, so they keep people trapped. And the difference is here, see how we had this wick, then we had these wicks, they were returning to the wicks. So that's why the range wasn't set, in my opinion. And then we eventually broke down. So that has proved that theory, really. But let's just say this ends up being the range low. from here, price should not return to these wicks. Now, I don't know if it is. I don't think it is. We need more time, but that's what's going to happen eventually. We will have wicks to the downside of our candles, and that's essentially the trapping of the traders, and then we won't return there. And once we won't return there, that's when you build your positions and you just get ready for the next phase of the cycle. This is also a very, very important time for altcoins. Are you happy for me to move on to altcoins?
Yeah, altcoins would be an excellent next topic, and I'm just also watching the chat as well as we talk. We're almost nearing 1,000 viewers. We've got 281 concurrent viewers. I know, absolutely epic, and just such an active community here. So, yeah, on the before we go to altcoins, on the concept of the consolidations, I want to say I think patience is so important there, because you've mapped out this really nice chart that shows how long this could go on. So people shouldn't be in sort of an urgent rush of like, this is going to happen quickly. There's really a story for us here to sit back and watch. So that was a really cool demonstration. And will you share this chart on your social handles? Is that something we can look forward to and we can follow to get this chart?
Yeah, definitely. I mean, I refer to this chart a lot on my shows on YouTube, but I'll happily share them on my socials, on my Twitter and stuff as well. But I think the key is, like I said to you, most people find consolidation boring. You have to understand that's the point. Okay. So the market maker has objectives, and their objective is to get you to commit to a trade, because if you don't commit to a trade, there's no liquidity for them to move the market where they want to. So they do that in a few ways. One way is they issue fast moves. For example, this here at the time would have felt like 3 very fast moving candles to the upside. When you're an amateur trader, you FOMO when you see that, right? You don't wait for a pullback. Like, think about when you were in your very early trading period, you were just getting into it. These things make you believe, I'm going to miss out if I don't get in, and then you end up buying like right at the top and you're part of the trap and it pulls back. So that's one way they do it, by issuing fast moves. Another way that they do it is by boring you into a trade. Okay, so that's accumulation, by putting price into a range. It just goes sideways and feels like it's doing absolutely nothing. Like before yesterday's breakout, they bored us for 61 days. That's 2 months of boredom, okay? And they were happy to do it if you were trading higher timeframes. There weren't any trades for you. If you're a day trader like we are, then I think it was let me check, is it an 18%? Yeah, it's about a 17-18% range to trade, which is excellent for day trading. But, for higher timeframe trading, you've been sitting on your hands for 2 months, essentially wondering what's going on. And they do that on purpose, because why do they want to bore you into a trade? Because when you get bored, when price only goes sideways, you guess. Okay, and you start to tell yourself a story, especially if you're taught to use indicators like Bollinger Bands. The Bollinger Bands tighten because we're in consolidation. EMA start to flatten out, things like that happen, and you believe, because those things are happening on your indicators, that price must break out soon, but you don't know which way because there is no trend. Therefore, you guess. So there would be 2 months worth of people opening short positions in this range, and 2 months of worth of people opening long positions in this range, and eventually someone's going to be right. But if you learn to understand where the market maker is setting the trap in that accumulation, then you can be on the right side of it a lot more often.
So going back to the start of that as well, your comments on FOMO and those 3 green candles, and you were mentioning new traders. I was just kind of like nodding my head like, oh my gosh, been there, done that. I think a lot of people can relate to that type of action, and just feeling like you have to get in and you're going to miss it. But that's why I really like this part of the show here, and you walking us through consolidations. They just take great patience and planning.
Absolutely. And look, a lot of the time when people do hear me talk about trading for the first time, they will say, oh my God, it feels like you're calling me out. But the only reason I'm calling you out is because I was that trader too. Do you know, we all start the exact same. And it was only when the reason that I got onto market makers was because I was trading cryptocurrency back in 2016. And then we had the 2017 bull market, and that's when the CME futures came in. And we all believed prior to that coming in, we all believed that it was just going to go forever, you know, like CMEs coming in, so much money is coming in, like, wow, we're all just going to be mega, mega rich. And then bang, the day it comes in, it's the end of the bull market and it just absolutely massively drops. And so me as an amateur was like, why did that happen? That doesn't make sense to me. We were all so sure that this was going to bring massive money. And that's when I started to really research it. And I realized, hold on a second, market makers aren't going to come in and buy at a high price, you know, and that kind of led me down this path of realizing, okay, I want to trade like the big money. I want to be on the side of the right trade. I don't want to be the liquidity that gets taken out as they build their positions.
Fantastic. And it does make sense, which is if the big money has the capital and are you know, largely the ones accumulating during these consolidations, or the ones who can truly move markets, why not trade with them? Why not follow that trend? It's probably better to be on the same side as them than to try to go against them. They have more capital, more resources, larger teams. No reason to try to battle that. And you mentioned altcoins, and altcoins are pretty fascinating right now. I really want to hear your thoughts on that, especially just relative to Bitcoin. And, you know, I think a lot of people see them in two different markets in a way, right? You've got Bitcoin, possibly Ethereum, sort of the two powerhouses, the largest market caps, and then sort of everything else. And like, what does that mean for risk appetite? Maybe what altcoins could be next? What's rising? What's dropping? So I'm very interested to hear your thoughts on this. And some altcoins have just been going bonkers the last few months. So let's talk about it.
Yeah, absolutely. Like some altcoins have really taken off. You know, usually we follow something called the path to alt season, and that starts, you know, with Bitcoin, and then we move into Ethereum. Ethereum tends to move following Bitcoin, and then we go into large caps, medium caps, and small caps, and that's kind of how the cycle plays out. But this cycle has been a little bit different because Solana kind of took over, and that was the one that, you know, really did some pretty amazing things so far this cycle, and Ethereum has lagged a little bit behind. Now, does that mean Ethereum won't catch up? Probably not. But I think the thing that we're seeing right now is because we do have some of those altcoins that have done some pretty amazing things. In this accumulation phase for Bitcoin, the dominance is bringing altcoins down a lot. So we have a dominance shift into Bitcoin. That means if Bitcoin's going sideways or it's dropping down, then altcoins are going to feel a lot more pain than Bitcoin does. So whilst we can handle this little bit of pain on Bitcoin, it doesn't really bother us. When that transfers to altcoins, because there's essentially not enough money in them to hold them at a very decent price, they bleed out a lot more, and it's causing a lot of panic right now. So I want to ease that panic a little bit. And I just want to show you where we are in the cycle for altcoins following that path to alt season. So I'm going to use Ethereum, and I'm going to use this in relation to the Bitcoin halving, what we expect around that time. The biggest mistake I think people make is that when they want to invest in altcoins, they only look at that altcoin. So I've got a split screen here. On the left side, you can see this is Ethereum USDT. So Ethereum against USDT. On the right side is the Ethereum price against Bitcoin. So a lot of people, when they want to invest in an altcoin, will only look at the USDT chart. And the problem with that is it's almost like you're buying with one eye closed. If that chart is not that altcoin that you want to buy is not also bullish against Bitcoin, you essentially have a pretty big opportunity cost in holding that altcoin as opposed to Bitcoin. And the trend in this phase, in this phase of the cycle, where we're in the Bitcoin accumulation phase, we're also in the altcoin accumulation phase. However, the altcoins will bleed out a lot more, like I said, because of the dominance. So it will feel a lot scary, whereas the pullbacks on Bitcoin don't really feel that scary. And when we have a look at the USDT chart, for example, I just want to give you a really good strategy, I guess, to know when to buy any altcoin that you want to buy for this cycle. It should all follow the exact same path. And what that is learning where the cycle's support is of the halving phase against Bitcoin, not against USDT. So to show you an example, this is a USDT right here on the left side, and this shows a 91-day accumulation period around the Bitcoin halving, but for Ethereum. Then eventually it breaks down. It doesn't really come back for a retest. However, when you have a look at the Bitcoin pairing of that same asset, you can see here we have the accumulation phase. It breaks out, but it comes back to retest. So more often than not on your altcoin, you are going to see the halving support line. So the halving support line, once it's set in the accumulation, will retest. And that is your time to know, okay, now it's time to act on altcoins. A lot of people are panicking right now, believing that altcoin season isn't going to come because the altcoins are bleeding out so badly right now. But have a look at these days. This is 136 days just of accumulation before the breakout and retest, which then took another 157 days around the halving period. We're, like I said, we're only 2 weeks after the halving right now. What are you worried about? It's not even time for alt season. You know what I mean? So if you want to buy, this is a really good strategy for any altcoins that you want to buy. Don't worry too much about what the USDT chart is. Wait for the halving accumulation to happen, number one, then wait for the halving support retest to happen. Because now if I expand this chart to show you, look what happens following that support retest. This is where we end up in that massive blow off top phase of the cycle. We're nowhere near there yet. So even if you feel like you missed out on altcoins, it hasn't even happened yet. There's so much time. Some things have moved a little bit early, like Solana, but for the majority of altcoins, it's not even a conversation yet. And so when I have a look at ETH in the current price cycle portfolio, and one other thing I'll just quickly show you, because sometimes there isn't a Bitcoin pairing for the thing that you want to see. So for any coin that you want, like let me just come here. If I wanted to search a coin, like if I wanted to compare ADA against BTC, I would just write ADA BTC and it would come up. But for some of the newer coins, they don't have a Bitcoin pairing yet. So if you're in that situation and you want to see how something is performing against BTC, then you just type in the coin. So I'm just going to type in, let me just think of one, Phantom USDT. So type in the whole ticker / Phantom BT, sorry, not Phantom, BTC USDT. And then when you click enter on that, that's when you'll get the Bitcoin pairing of that particular coin. So don't worry if it's not even there on TradingView. It's a bit of a TradingView hack, and it's pretty awesome way to be able to check how anything is performing against Bitcoin. And finally, I'll just move on to Solana. So just to show you how Solana has been a little bit different, but it was same in the last cycle. So this is, again, the 2020 halving period, the accumulation in the USDT pair, the accumulation in the Bitcoin pair. But look, in the USDT pair, it never came back to retest the halving accumulation support, but it did here perfectly. Okay, so against Bitcoin, it did perfectly. And that's, again, when we have a look at Sol currently, again, a little bit of a bull flag formation, some nice wicks around the 200 EMA, but it's still in its accumulation period, period on the Bitcoin pairing. So yeah, I hope that you know, kind of eases the mind of people who might be a little bit in the red in their altcoin portfolio currently, because all you really need to do is just keep watching the Bitcoin pairing on a higher time frame, wait for that retest, and that retest is where you can add to those things that you might be in the red on and bring your average entry down a little bit. But also, if you don't have any altcoin portfolio and you're looking to build one, this will be where you go in on that when you get that halving accumulation period support retest. That was a tongue twister.
No, I mean, you just took us through probably the most important, backdrop of altcoins and what traders and investors should be looking at and the way they should be performing their research. And there's two things that I noted, and I'm hoping some of our active community noted this as well or wants to hear more about it, which is you started off talking about the opportunity cost of altcoins versus Bitcoin, which I think is critical for people to understand, because you're exactly right. If you buy an altcoin or you're looking at a specific altcoin to trade, your opportunity cost is just basically buying the bellwether, the blue chip, the one that's sort of, the largest market cap, Bitcoin. So if you buy
Yeah.
that altcoin and Bitcoin outperforms it, you took on more risk technically because you bought a sort
Yeah.
of smaller, more volatile asset and missed out on if you just sort of maybe held sort of the blue chip like Bitcoin. So I think that's just so important to emphasize. And I wanted to comment on that quickly because I found myself once again nodding my head like precisely. Altcoins offer, more volatility, more risk, potentially more reward, but there's always that opportunity cost of what you could have
Yeah.
also done. So I thought that was really cool. And then the other aspect is your ratio charts are just fantastic. Doing that symbol calculation so you could price these things in the
Yeah.
coin that you want. That was
Yes.
pretty key for me. And I'm hoping some people noted that because, yes, if you use that calculation, you can still get the ratio charts that you're looking for,
Yeah.
even if they're not available. So wonderful
Yeah.
walkthrough. And, before we get to Solana, because Solana has just been, it was on a tear. Actually, I'm really interested now to see
Yeah.
what you're looking at. I do know that speaking of symbols in the exchanges and just, your partnership with OKX as well as TradingView, being a connected broker, I feel like now is actually a very perfect time to
Yeah.
quickly segue to that walkthrough when we were talking about, working with connected brokerages. And maybe you could take us through that process.
Yes, absolutely. So OKX has a really, really good feature with the TradingView platform, and it allows you to be able to connect your OKX exchange account directly to TradingView so that you can place your trades directly through TradingView, which means you don't have to be switching tabs and checking the price over here to then go over there to place your trade. You can do everything in the one place. So I'm very, very quickly going to show you how to do that. First of all, you're going to need an OKX account. So if you don't have one, you want to get that first. Probably the best way to connect is to be logged into your OKX account. So create your account and log in first. Then you're going to come over to TradingView. Now, this is just a example trade that I've set up just so that I can show you how to do this. This is absolutely not a real trade. And if anyone takes it, example. So you do your trade setup, however you do your normal technical analysis, you decide where your entry is going to be, where your stop loss is, and where your take profit is going to be. Then in order to connect OKX, you just come, I hope you can see down here on the bottom right-hand side, it says open panel. So you click on that, and then here where it says trading panel, you're going to have a list of brokers. And if you don't see OKX there, just scroll down to where it says, hold on, I've got my thing in the way. Oh, here. It says, sorry, I've got the little thing that says stop sharing in the way, but down there somewhere it says view more. Okay, so you'll find it and then find your OKX and you just click on that. I'm going to show you how simple it is to connect. You just click this connect button. It's going to revert over to OKX and then it will come immediately back. And you can see here that your account is connected. I've just set up a test account so I can show you how to use this. So you authorize that. And then it will take you back here over to TradingView. And now, once it's connected, you will see all of your open positions, if you have any, your past orders, and your history, your account summary, and any notifications. And over here, you can select whether you want to place a trade in your spot account or a derivatives trade. So I'm just going to keep this here. And then you'll also see an account balance here. So once you're ready to place the trade, you click on this trade tab. And then I'm just going to reduce that. And now over here, all you're doing is entering the numbers from your trade setup. So I'm going to do that just very, very quickly so I can show you an example.
So, and really quick, by the way,
sec.
to all the viewers, Annie is now going to, demonstrate an example trade, which I think for all the new traders, right, they're always looking to learn something new. You might see something that's of use here.
Yeah. So all I've done here is enter the numbers that are exactly here on the side for my entry, my stop loss, and my take profit. I've entered all of those in here. I've done it as a limit order because I want to see price come down, hit my entry, and then I'm anticipating it will take off. Again, example trade, not saying this is going to happen. Or if I was in a wanting to enter immediately, I could just click on market to do that. So here I've got everything set up. And then the next thing I want to check, if it's a futures trade like this one is, I want to check that I'm on isolated. They have the option for cross leverage or isolated. I'm just one of those traders that believes you should never use cross leverage, but if you're taught to use cross, this is where you would make that decision. So I use isolated, and this has a 5% stop loss. So I'm just going to keep my leverage on 3x, but if you want to change it, you can change it over here. And then once everything is set up, the last thing you just need to do is just decide how many you want to buy, and you click on this buy button. And there you go. My whole order is in. So my limit order is here, meaning if price comes back down, it's going to pick up my order, and then hopefully it bounces and goes up to my take profit. If it hits my take profit, it will close my trade out completely. If it hits my stop loss, it will take me out with a loss. And that's it. That's the whole order is completely done. Once it triggers, it will trigger directly in the OKX exchange. You haven't needed to go back there at all.
So my comment on this, which I think is to the new traders or the professional traders out there, anyone in between, is in this demonstration, there's two things I want to point out that people might find useful, and maybe you can comment on this, is being able to easily visualize the trade on the chart. Like, just see, there's your take profit, there's your limit, there's your stop loss. Like you have a picture perfect example of what your trade is. Now, going back to how we started this show, right? Like, take us back to the beginning. Close the laptop, turn off the phone.
Yes.
You can visualize it. Like, I think that's, it seems obvious, but it's really remarkable how many people might just click market order, or they might just sort of not do any drawings like that to see the trade. And that's why then they're stuck watching their trade or second guessing themselves because they don't set it up like this. So maybe just add some color to that. I'd love to hear your thoughts on it, especially as someone who trades and travels.
Yeah. Well, I mean, another thing too is, it could even be that you see a potential trade set up before bed. That's the worst, actually, because, if the entry's not there yet, but you think it's coming soon, instead of having to wait up 3-4 hours for the entry to actually present, you can just do your technical analysis, through TradingView, set everything up, decide where you want to enter if the price comes back there, put the order in, close the computer, and go to bed. The outcome is the outcome. Wake up, and like I said, as long as you're using correct risk management, if you wake up and your trade didn't play out, you shouldn't be risking more than 1% of your trading account anyway. So at worst case, you've lost 1%, but you still got 99% worth of chances to try again,
We probably should have commented on that earlier in the show, but this is still a good way to kind of recap the show. We still want to get to Solana. I think we'll have time for it, but something you said too about risk management, only 1% of your account or possibly less, depending on how people approach it, is, exactly that is, I've come to learn that traders who are really experienced and have been doing this for a while, if they set up their trade properly, and let's say they lose, right, their stop loss is hit, it really doesn't bother them because they've already know their strategy. They know what their account, what their account size is, what their limits are. It's just sort of another day in the process. And your comment about going to bed too, maybe with a trade on. Well, if you have your stop loss set, no problem, right? You wake up, if you lost, so be it. It's part of the game. On to the next one. So I just think that is, just a key thing to reiterate as well on this part of the show. And before we get to Solana, do you have any? So the way you approach risk management, is that something that you are often really pounding the table on and getting the message out there? Because maybe talk about that a little bit.
Yeah, I do think that, it's not taught enough to new traders. And that example I gave of not risking more than 1% of your account, that is definitely where you should start. And it should be a percentage, because the moral of the story is, if you're going to start with, a trading balance that you decide to put in, you have to consider that money gone before you start. Okay, it's gone. You consider it the cost of education. So you would not put in more than you can afford to lose just to learn. It's a university degree, right? And even that, you decide how much you're willing to do, and you should probably split that in half and start with that half, expecting that first half to go to nothing, right? These are lessons, these are the learnings that make you better over time. If you did it that way, then the next half is what you can then put back in and hopefully manage better based off the lessons that you learned off the first half. So that's one way to do it. After that, whatever that account balance is, you should not risk more than 1% per trade, which means that where your stop loss is placed, if the price were to go against you and hit that stop loss, you're only losing 1% of your account. And if you do it that way, you essentially have infinity chances, because it's always 1% of whatever your balance is, you know. But probably if you were to lose 100 trades in a row, like, maybe stop. Like, that's probably, you know, you probably kind of need to plan how you want to do that. But you know, it gives you a lot of chances doing it that way. Once you do have, you know, 6 months under your belt where you are consistently profitable, remembering you're going to have really bad weeks, you're going to have really good weeks, you're going to have mediocre weeks. We don't judge ourselves by week. We don't judge ourselves trade by trade. We judge ourselves by either a group of trades or a time period of trade. So how did I do over the entire last month as a whole? That's what helps you to realize when you've hit that point that you are a consistently profitable trader. And when you do hit that point, that's when you can then decide to maybe risk a little bit more. But in general, I don't think that professional traders ever really even get up to a 5% risk per trade. A real professional trader would not take that much risk because it's not necessary. It's about making better decisions, having a good risk to reward. This tool is your risk to reward tool. That's essentially what it is. It's saying, for whatever I risk here, if the trade goes against me, here it says risk reward ratio 3.95. So whatever I risk, if the trade goes against me, if it goes the opposite way and I take the profit where I've set it, I'm going to make 3.95 times the amount of that, which means that, you know, I don't have to be right every time in order to be profitable.
Wonderful. And that calculation right there using the long short position tool is about the long short position tool. So
complete waste of my time and a complete waste of my life, but I got the rungs on the board. You know, I learned to understand very quickly the candle movement, because price, it's not about price. Who cares what the price of anything is? It's about how it moves. And that's what you're looking to exploit. So scalping, you get to see those movements because they're on very small time frames, very, very fast. And actually, if I can quickly show you one way that I scalp, let me just see. If I have it here, it's an indicator. So another good thing about TradingView, you can create your own indicators and you can save them. And this is one that I created based off again another Forex method. So I didn't invent this by any means, but this is a public indicator that we created. Anyone can choose. Let me just show you how to find it. So you go up to indicators. Sorry, this is taking a second to load.
Wow, but that seems like if this is the indicator we're looking at, there's a lot of data being calculated here. I see all the color variants.
Yeah. So it's here. It's called, the script name is Annie's Ribbon. So if you type that in, you should hopefully find it. And it essentially, it brings up this rib. There's a number of indicators on here, but you're looking at this red change to green. And this works really, really well on the lower time frames, 15-minute, 5 minutes sometimes. 1 hour is probably the highest time frame that I would use this indicator on. But when it loads in a second, it's essentially telling you when the trend is changing from bearish to bullish or bullish to bearish. And there is a whole strategy. I do have a full video on how to use this on my channel, but you will notice the 2 yellow EMAs within this ribbon, and they show up on the red and also on the green, and they are essentially your retest levels. So the way you use this ribbon is when it changes from one trend. So this is the green trend. So when the price changes, it will cross below. And then when it comes back up to retest either of the two yellows, that's where you open your position in that direction. And you will take that trade with your stop loss just above the ribbon. So you're trying to get in as close to the changeover as possible, but you're waiting for price to break and then retest it. And this isn't the perfect example. I'm just trying to quickly show you what to do. And then you follow that along. And as long as the price is rejecting off the yellow line, you can stay in your scalp. So for this one here is where it started to cross back. So this is where you would take profit on this scalp. And this, you know, as a very, very rough example, is a 4-to-1 risk to reward, which means if I risk $100 on this trade, I've made $400, and I have made that in how long? So in 1 day. So it's $400 for 1 day's work, not too bad. Do you know what I mean? So that's a scalping strategy I really, really like, but it works really well in a trending market. So you always have to make sure that you're in a trend, because when we go into that consolidation again and we go sideways, you're going to get many, many false signals like this, where it just keeps swapping from red to green to red to green. So always make sure that you're in a trending market first before you use something like this.
So to all of our viewers in the chat asking about scalping, we just got a very nice little overview there from Annie and her background, as well as some indicators, which is, I always love seeing indicators and custom coded indicators. I've noticed that you do like your colors, which I think is really fantastic. Even the Asia, UK, US, right? That's a cool indicator. I've never thought is that so you can watch
that's another one that we created. Yeah, it's another one we created. That's also another public one. So if anybody wants to add that, again, it's just going to show you when the market is moving, and it's also going to show you when, you know, the weekend is here. So time off, go enjoy your life. But that's called market session times. And if you just search that in the TradingView indicators, you'll see it there by TradeTravelChill.
Wow, that is cool. So maybe a way to wrap up the show, because I know we crossed the hour marker. People in the chat will probably be potentially quite sad that we're sort of nearing our end. To our 1,200 plus viewers, thank you so much for joining us. And I think the way we'll end is taking us back to the start of the conversation about making sure that you know sort of your correct times that you like to trade, staying, calm, not being connected to markets all the time and making bad decisions. Tell us just about that indicator and how it helps you, because I think that'll just take us full circle in terms of your concept and what you bring to trading, which is something I really like, which is really knowing your process and when you should be connected to markets and when it's time to give yourself sort of like that break, time to chill.
Yeah. Yes, certainly. So this is the market session. I'm just going to get the other indicator out of the way so it doesn't distract us. But this down here is the market session times indicator. And again, you just go to indicators and type in market session times, you'll see it. And what this is doing is it's marking for us the different time zones for the market makers trading. And we've got Asia, UK, and US. Each session has a particular behavior. And if you understand that behavior, you can exploit the moves. So Asia's session is usually designed to consolidate and set the initial high and the low of the day. It's usually about a 2% range. It's a good enough range for scalping. If you learn how to know when the initial high and the initial low is set, you can scalp that range. The UK is designed to run a slow trend. So if you don't like super high volatility and you kind of just like to run a trend and be in a trade for a few hours and just take your profit and it's a little bit cruisy for you, the UK is going to be your favorite session to trade. And US brings the volatility. So US, depending on where we are in the overall, the cycle. So where is it now? This one here that I showed you, depending on where we are, the US's job usually is to either reverse the trend or to continue the trend that the UK started. And there are ways to identify at the session open which one they're going to do. And then there's this little shaded area in between the US and Asia. That's called a dead gap zone. And that's when it starts at 5 p.m. New York time. And that's when the market is technically open, but the market makers aren't on duty. That tends to be in cryptocurrency a very highly volatile time, and it can be quite unpredictable. So generally you want to avoid trading in that time. And this goes starts Sunday, 5 p.m. New York. So again, it doesn't matter what time zone you trade. If you want to add this indicator, the indicator is always going to be set to New York time. So even if down here you want to change this to your time zone, you can do that, but the indicator will stay set to New York time. And it does that because of daylight savings. Daylight savings in different places around the world can throw off the times, but the times are always set to New York. So we set the indicator to New York. So you'll see this, it will show up only Monday to Friday. And if you understand the behaviors, you can trade those sessions. That's when we're just kind of the dots on each session are so there is a thing called the Asia extension, usually happens around 1 a.m. or 2 a.m. New York time, and that consolidation will extend the move, and it's a setup for the UK session. So if you learn what the extension means, you will understand how to trade UK. And then UK has the same thing, which is essentially the setup for the US. The first 3 hours of the US is when we are at risk of a reversal. So if you're in a clear trend at the end of UK and that trend continues through US, if you can get past the first 3 hour mark, then you're likely for that trend to continue. But at any point in those 3 hours, it can reverse. So the first 3 hours of the US session are your best times to trade as a day trader.
Fantastic. And on that note, we're over an hour. I want to thank Annie for joining us on the show. I want to thank also her partner, OKX, as well. And of course, to all of our viewers, we hope that you learned something new. You're walking away with some pretty key tactics and ways to think about markets, whether it's specific times, time zones, international markets, as well as the concepts that we covered from accumulation, the ribbons, this time indicator, and a whole lot more, especially about how you're managing your trades, being connected to global markets, essentially 24/7. So for me, super enlightening. I've got tons of notes I want to revisit actually after this, even for my own trading strategy. And I feel like it was just a great interview, especially for your community, the TradingView community, and others in the chat. This is one of the most active chats that I have seen. So kudos to everyone who's been involved. Amazing. And Annie, maybe before we head out, is there any final wisdom that you'd like to share with everyone in the chat?
I think my final wisdom is probably just chill out. You know, just if you are chasing money, money will not come. Just chill out, chase the skill, chase becoming really good at the skill, and then the money will come.
Wow. Chef's kiss, by the way, to that. That was awesome. Can you, that was great. Whoa. Okay. Annie, excellent way to end the stream. To everyone, thank you so much, and we will see you later.
Thank you.
We'll see ya. Bye.